Hi, everybody. This is Tracy Bates and Lorna Hennington with the Bates Hennington Real Estate Group, and we're bringing you, ta-da, Andy
Woo!
Christenot. And
Hi.
Christenot is a branch manager with Movement Mortgage, and she is our go-to lender, meaning that whenever we have a buyer and we want to make sure that they are able to get the house that they want, we send them to her to get the loan.
Right.
So Andy is here on the first of a series of videos that we're going to do talking about loans. And she's going to make it interesting.
I'm
So sexy.
So Andy, tell us a little bit about yourself, how you got into loans, and what we can expect in this environment today.
Yeah, I'll make it short and sweet. I have been in the loan business for over 20 years. I've been through a couple of different cycles and so forth. Mortgages and real estate loans are very much a fluid market, and so it's important to stay up to date and in the know on what to expect, during the process and course of getting a home loan and so forth. So in terms of the current market situation, things are highly competitive. And for Los Angeles in particular, I know it's happening all over the country, but for Los Angeles in particular, there's very much a supply and demand issue in terms of properties. There are far more buyers than there are properties. And I suggest to anybody that is referred to me, the best thing that you can do in the process is get pre-approved.
Mm-hmm.
You want to make sure that your financing piece is airtight. Not only does it mean and can give you an advantage in terms of getting your offer accepted, but you also want to make sure that the process is smooth. The last thing anybody wants is any sort of hiccups or speed bumps when you think you're supposed to close and all of a sudden there's a surprise. So I suggest to anybody, you want to make sure that the financing piece is airtight before you're looking at properties and before you're out submitting offers.
Andy, can I just ask a question that's often asked of us and we answer it, but you're the professional. So what's the difference between a pre-qualification and a pre-approval? And why is it so important that you have a pre-approval instead of that pre-qual thing?
That's a good question. The difference between a pre-approval and a pre-qualification would be if somebody called me up and they said, Andy, I was referred to you by Tracy and Lorna. I have good credit. I've been employed for 20 years. I have 20% down in the bank. Okay, sounds good. Sounds like you qualify. On a pre-qualification, I haven't reviewed or plugged in or run your credit. I haven't reviewed anything. I'm taking really your word for it. And I'm going, okay, it sounds like you would qualify. Here's your pre-qualification letter. Once I get everything over, then we can get you pre-approved. The difference of a pre-approval, I'm getting everything in terms of documentation for income, for credit, down payment, all of those things. You're completing an actual loan application. And I'm going through and I'm essentially pre-underwriting and saying, you absolutely qualify. There's no reason that we wouldn't give you a loan. So there's a big difference. And especially in this market, you want to make sure that your clients are pre-approved. It's critical, actually.
So. It is, and you bring up an important point, and I'm glad that Lorna asked that question too, because once a client goes to make an offer, the agent on the other side wants to see a pre-approval. They don't want to see a pre-qual.
Right.
Pre-approval has gone through what you have done. You've looked at documentation instead of just taking someone's word for it. So we can't even go past and submit an offer for anyone unless they have that pre-approval letter. So
yeah,
it's important. Yeah.
It's also important for people to know too that I get calls all the time and people go, I have really good credit and I have really good assets. I don't show a lot of income on my tax returns. When we're looking at pre-approving somebody, when I'm looking at pre-approving somebody, it's a total picture in terms of qualifying. We're looking at income. We're looking, are you self-employed? Are you W-2'd? We're looking at tax returns, W-2s, pay stubs, depending on what somebody's circumstances are, determines what sort of documentation we're looking at for income. We're also looking at credit risk. It's not just credit score, it's also number of credit lines. So I work a lot with people that have come from other countries and so forth, and they're newly established in the US. The number of credit lines also plays into what kind of loan you get. So credit, income, we're also looking at assets, down payment. You know, are you getting a gift from a family member, or do you have the money in a stock account? We're looking at all of those things. And overall, when we're pre-approving, when I'm looking at somebody for qualification purposes, I'm going, okay, what sort of risk level with all of these factors is there for us to give somebody a loan? Do they have income to support the payment? Is their credit, does their credit show a history of repayment? And then also, do they have the money to put down and for closing costs? So it's a total picture. It's not just credit. Having a great credit score is one thing, but you also have to show that you can make and afford the payment. That's the biggest thing.
Yeah, it makes sense. And so to wrap it up in a nice little bow, if somebody out there is listening and wants to contact you and get pre-approved so that they could purchase a home, what, generally speaking, are the documents that they should have at the ready?
Sure. It's gonna vary a little bit depending on what somebody's work situation looks like. I work a lot with people that are in the entertainment industry. Their documentation is going to be different than somebody that's a W-2'd engineer, you know, at SpaceX or something. So generally speaking, it's 2 years worth of tax returns, W-2 statements, if applicable, current pay stubs, if applicable, 2 months bank statements. And that's really the gist of it in terms of documentation for supporting income. We're looking at overall risk to see if somebody has the ability to repay it. And it can get a little tricky with somebody that's self-employed. Somebody that is self-employed, we're going to look at 2 years tax returns as well as a year-to-date profit and loss statement. We want to make sure that, especially because of COVID-19, we want to make sure that somebody that is self-employed, that their business is still on track from last year. We certainly understand that there's been, you know, a pause for a second, and somebody's income may have suffered a little bit because of COVID. But somebody that's self-employed, we're especially looking at a year-to-date profit and loss as well to back up tax returns and things like that. So it gets a little complicated, and each scenario is a little different, but in general, income documentation, bank statements to show down payment, and then we're of course looking at all 3 credit bureaus when we're pulling credit.
Perfect.
Yeah.
Well, great, Andy. Thank you so much for joining us. Why don't you just give a little shout out about your contact information?
Sure. Andy Christenot, Movement Mortgage. My cell phone number is 562-301-0324. Miss Lorna and Tracy also have my contact information. I'm available via email, phone, you name it. Always happy to be a resource and answer questions. So
Andy is always available to us. You're wonderful, Andy. We so appreciate you. Thank you for this time. We know you'll be back. And everybody, you can contact Tracy and I at experts@bateshennington.com or www.bateshennington.com. And you have our cell phones from previous videos. And so I won't give those again, but get in touch, ask the questions, get ready, make your next move. Time is of the essence.
Yep.
Thank you, and happy holidays, everybody.
See you next time. Thanks, Andy.